Will Cathie Wood's ARK Invest buy this new high-growth stock? Cathie Wood's ARK Innovation ETF focuses on investing in disruptive innovation. If you follow the latest stock market news and trends like me, you've probably seen Cathie Wood on TV with her price targets on Tesla stock. It seems her price target on Tesla stock just keeps going up every time she makes a TV appearance on CNBC. Cathie Wood and ARK Invest is a trending name right now that all investors should be aware of. If you're familiar with Cathie Wood, ARK Invest, and her team's Tesla price targets, then click that like button. I'm interested to see how many people are staying on top of the current trends. Comment below what your current price target on Tesla stock is. If you're not familiar with these names, Cathie Wood founded ARK Invest, and as Chief Investment Officer and Portfolio Manager, she focuses on identifying investment opportunities resulting from technological innovations in categories like artificial intelligence, energy storage, blockchain technology, and DNA sequencing, to name a few. I recently came across a new stock IPO which is looking to disrupt the old school insurance industry with new school technology that uses machine learning. The stock looking to take market share in the insurance industry is called LMND, or LMND stock. And I'm sure this stock is on ARK Invest's radar and research board. What's up, everybody? Welcome to Mr. Zero to Infinity for this episode 56. I'm going to discuss some of my thoughts on LMND stock and why I think there's a high probability that Cathie Wood's ARK Invest will buy this new and innovative stock that has high growth potential. To end, as I always do, I'll provide a quick update on my Zero to Infinity stock portfolio, which I've been documenting since episode 1 at the beginning of the year. If you're growing your stock portfolio as high as possible like me, then feel free to subscribe and join the community. This channel is about investing and building wealth in the stock market, and it's my goal to help do-it-yourself investors get an inside look of how I find the latest trends to grow one of my stock portfolios from zero to infinity with over 10 plus years of investing experience. Before we start, remember that this video is for entertainment purposes only. I am not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. All ideas and opinions presented in this episode are mine and mine alone. You should never take any of this information as guidance for buying or selling any type of investment or security. Always do your own research prior to making any investments. So earlier this month, LMND stock IPO'd and hit the public market for retail investors to buy and add to their portfolios. As a retail investor myself, I'm always looking for the next best high growth stock to add to my stock portfolios. LMND stock not only caught my attention as a new IPO, but I'm also familiar with one of the co-founders named Shay Wininger. Yes, the same Shay Wininger that co-founded Fiverr.com with Miha Kaufman. If you've been following my episode series documenting one of my stock portfolios starting from zero, you already know I'm a part owner of Fiverr International, and Fiverr stock was the first stock I started building a position in. The stock is up over $2,000 at the time I took this screenshot of my portfolio. So that name piqued my interest. If Shay Wininger has the brain to be the co-founder of Fiverr.com, what's this LMND stock all about? So let's break down my thoughts. LMND has a fantastic 30-minute video on the investor relations page with CEO Daniel Schreiber going over its business model in detail. In short, LMND's goal is to disrupt the insurance industry with technology. Right now, it provides homeowners and renters insurance, and recently just added health insurance for cats and dogs. LMND's technology uses machine learning to crush costs for customers. The system is powered by artificial intelligence and behavioral economics, which is why I think LMND stock is on ARK Invest's research board as a potential buy. LMND replaces human brokers with bots and machine learning. Zero paperwork, instant everything, lightning fast claim payments, best in-class customer services, and hassle-free digital experience are some phrases that I heard and put in my personal notes on Lemonade stock. The technology is very interesting, but the big question any investor wants to know is, will Lemonade stock be a high growth stock that makes me a lot of money over a long period of time? If you're looking for those high growth stocks like me, then click that like button. Based on my research, Lemonade's core business focuses on millennials with their renters and homeowners insurance. The goal is to get young people in the Lemonade brand as early as possible and keep them in the ecosystem forever. Brand loyalty is very important when I buy stocks. This is why I have Apple stock and Costco stock in my portfolio. The big hurdle that I see for Lemonade is, will more and more people switch from the big brands like State Farm, Allstate, Liberty Mutual, Progressive, Geico? The list goes on and on. The insurance industry is huge, and there are a ton of big names already in the space that have years of experience and market share. The CEO, Daniel Schreiber, has highlighted the fact that Lemonade's main goal is to make heavy investments right now. The mindset is every dollar invested now will be returned years and decades to come. From my perspective, I do think the insurance industry will get disrupted with easy-to-use technology, compared to wasting a lot of time on a phone line shopping around for the best prices with all of the big insurance brands. At the end of the day, I want the best deal on my insurance needs at the most affordable cost, and I want to be comfortable with dealing with the company if I have to file a claim in the future. One of the downsides to this type of disruptive technology in Lemonade stock is competition. If a brand like State Farm or Geico sees Lemonade's success with machine learning and bots, what's holding them back from building their own technology to compete with a small player like Lemonade? If the big insurance brands don't innovate, that may be a huge mistake looking back 10 plus years from now. It's kind of like what happened with the electric vehicle market and Tesla. Tesla saw an opportunity, built a business model slowly and steadily, and by the time big automakers noticed the rotation to electric vehicles, Tesla already gained a huge market share with a huge head start. Right now, Lemonade is a small fish looking to play with the sharks in the insurance industry. Will that fish continue to grow and grow without the sharks noticing? I don't think so. I think all eyes are on Lemonade and its revenue growth over the next few quarters and years. Lemonade is not a profitable company at the moment, and since it's being categorized as a tech company, the future valuation is being built in today's stock price at a $4.2 billion market cap valuation. Here's a question to think about. Are the costs associated with human insurance brokers a liability or an asset for most insurance companies? Time will tell if more and more customers make the transition to working with bots versus humans. There's a lot to like about Lemonade's goal of disrupting the insurance industry, so I'll be monitoring the price fluctuations on this one very closely. As a long-term investor, I do like scalability, and I think Lemonade can scale fast as a technology company if more and more people make the switch from their old school insurance providers. This is a long-term trend that I want to stay on top of and research further. I think Lemonade's path to success is its brand recognition over the next few years. Let me know your thoughts. Do you think Lemonade stock is a high-growth stock that will make investors a lot of money? Do you think Cathie Wood and her team at ARK Invest will buy Lemonade stock and add it to the ARK Innovation ETF portfolio, ARKK? I personally think Lemonade, the insurance company, has a ton of growth potential, but I think LMND, the stock, will be very volatile over these next few weeks. So I want to follow the technicals and monitor the support levels with this stock. Investors that got shares at the original IPO price of $29 are already in the green, and I think there may be a large percentage of Lemonade investors looking to sell their shares and take profits once they are allowed to do so. IPO lockup periods usually last between 90 and 180 days. For now, Lemonade stock is high up on my research board. To wrap up, let's do a quick update of my 0 to infinity stock portfolio. The portfolio at the time I took this screenshot is a little over $8,700, and I'm up 65% year to date. If you've been following along the journey of growing this stock portfolio starting at episode 1, you know that I have yet to sell any of my stocks at this time. I've been increasing each of my 7 holdings as we continue to move forward with this episode series. We have a big earnings season coming up for the portfolio. Starbucks and Apple report earnings this week, along with other big tech names like Amazon and Alphabet. Lots of movement is expected in all of my stocks these next couple of weeks, so I may be busy buying up more shares when the time presents itself. And you never know, there may be a new stock name added to the portfolio. Let's end it there. Play the music. If you made it this far into the episode, then click that like button and subscribe. One of my favorite comments from last episode is on your screen. Feel free to watch my earlier episodes of how I'm growing one of my stock portfolios from 0 to infinity. All my episodes are meant to be watched in order since the stock market is always changing and there are always new trends to be found as the weeks tick forward. Instagram is Mr. 0 to infinity. Thanks again for watching. Hopefully, you'll join in on the next one. Let's keep building from 0 to infinity. You got this. Disclaimer, this video is for entertainment purposes only. I am not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. All ideas and opinions presented in this episode are mine and mine alone. You should never take any of this information as guidance for buying or selling any type of investment or security. Always do your own research prior to making any investments. Do not assume any facts and numbers in this video are accurate. Make sure to read the disclaimer on your screen fully. Peace.